how to be your own bank. So in this video, we're going to talk exactly about that. Now, there are several ways to be a bank. The one we're going to talk about is in the context of insurance. Now, you can also be a bank inside your LLC. So stay tuned. We're going to have those conversations. In addition, we're going to talk about So specifically, I'm going to talk about what's the difference between the life insurance and death benefit. What is a death benefit? And then just in general, what's insurance? Do you have life insurance? Do you have death insurance? And in that conversation, what's your goal? Because I can tell you there's only one way to do it if you want generational wealth. All right, so let's get to it. I have brought with me Jason Henderson, who's a partner of mine in an insurance company, because you have to have life insurance, not death insurance. And there's a very specific kind of insurance about being your own bank. So Jason, talk about that. How do you be your own bank?
Well, one of the things you need to do is to understand the contract. And that's really where the details and the magic is in the details. When you understand the contract and the type of insurance we're going to be talking about, it has more to do with the bank that's on the corner of your downtown city, wherever you are at, than it has to do with anything else. I mean, it's exactly the same, essentially, minus the checkbook.
So explain that a little bit. So we're going to get a life insurance company, right? So it's working with the right people, that'd be you, and you have access to the right companies. So if I'm out here listening on our YouTube channel, I'm saying, how do I become a bank? So I need to get insurance. They're going to have a session with you. We're going to offer that at the end in our notes. But what do they have to go through? Do they have like this whole exam? Is there like, what do they get when they get their insurance to then become a bank?
Well, the first thing they're going to do is we need to determine whether they qualify. And that's why you need to talk to me. We're going to simply ask a yes, no question of the right type of company, and they're going to come back with their answer. When it's a yes, then we know where to go. When it's a no, there's alternatives. Let's say you have bad health or something. There are alternatives. You still have the ability to have your own bank. It'd be slightly different, and someone that knows what's going on would be able to walk you through that process. It's simply doing an application and asking a yes, no question. There's no fees or anything involved with that. We're going to find out where the next step is.
So I get approved and I get life insurance. How does the bank work? Is it I put the money in, I pay my policy, and I can borrow it back? Where does the banking? Explain to those that are out here on YouTube going, this sounds really cool, but I still don't get the steps.
All right, well, let me review real quick what happens in a bank. Yeah. You as a depositor walk in the front door and you deposit $10,000 in cash. That $10,000 in cash does not sit there. The bank is attempting to loan that out as fast as they can. Maybe the person who walks in behind you wants to buy a new car, and they'll loan it to them at a higher interest rate than what they're going to give you for depositing your money there. That's simply what's going on in the financial world in a banking perspective. Well, with certain insurance companies, it's doing the exact same thing. They have someone that will invest their premium. The money doesn't sit there in their vault or anything. They turn around and loan it out to entities, a lot of times big entities like build a new Walmart or build a high school or something like that, or 150 plex, some big thing. They want to do, there's just as much paperwork for the big thing as they do a small thing. So generally they do it in multi-million-dollar loans. And so it's the exact same thing that's happening in the bank that you're familiar with, that's happening inside the right type of insurance company. So you're going to get a contract with them, and we're going to get the right kind of company that when you have that contract, you become an owner of the company. With ownership comes privileges. Everybody knows that. So as a part owner in this company, you now have total, and I mean absolute total control over what happens with the money that you invest. Will they turn around and loan it to someone else when you're silent? Absolutely, they're going to put it to work. However, you have first right of refusal at the best interest rate that they would give out to then invest it or use it however you want. So you now put yourself in the position of owning and controlling a banking system.
And so with that, give us an example, right? I put in, I'm going to say 50,000 or 100,000. Into a policy. Could I take it right back out and go buy a piece of real estate? Give me some examples of what I could do as I decide to be a bank.
Sure. So this is going to be something where we're going to make a plan to invest a certain amount of money every year. And generally in the first year, you're going to have access to say 80, 85% of your money. I'm going to make it bigger, Loral, and say 100,000 instead of 50. It's simpler math. So you have access to say $85,000 of your money right away. You take a loan against that money. Well, why do I want to borrow my own money? That makes no sense.
Yeah.
Well, the reality is you're not borrowing your own money. You're using the money you deposited there as collateral for a loan from the insurance company. Why do I want to do that? Well, your money is there and continues to compound. You're going to enjoy uninterrupted compound interest. You then get a loan from the insurance company and you go do whatever it is, which you might buy a car, you might buy a house, you might invest in a rental property, whatever it is. Now you have this access to this capital, essentially get two rates of return in that simple example.
Love that. So to get started, in the link below is an application. So they're going to fill out some, like you said, yes, no questions, and then they're going to hear back from you. And like, what if I have bad health? I just want to go through that example a little bit, because some people might be out there listening going, I have too bad a health. And I'm going to ask you another question on another. I can already tell there's some excuses going to go on. So I'm going to ask them.
Bad health, then they would not be insurable. However, they have insurable interest in someone else. Guess what? I have an insurable interest in you for the fact that you're my partner. You kick the bucket, our business would be harmed, right? There's an insurable interest. So you can have partners in business, you can have spouses, you have parents, you can have children. So there's lots of ways to get around this, I have bad health.
So another question I hear a lot is, I'm young, I'm single, or I just got married, I don't have kids. This doesn't apply to me yet. Speak to, when should people get it?
It applies to them. Well, I'll put it this way. In the event that you love giving extra money to the IRS and Uncle Sam, then maybe it's not for you. This truly is something that is off the IRS radar screen. And the longer it's in force, the better it gets. I used the example the other day with someone saying, fine wine gets better with age. Same thing with this. With age, it gets better and better. I told you you'd have access to 80, maybe 85% of that first year's investment. Well, fast forward 10 years or 15 years. One of my policies, for example, I put in 50,000. I had access to 120,000 the next day. Well, how many times do you want that deal? Every single time. However, there's a process to get there, and it needs to age to get to that point.
So talk about the IRS. How does this stay off the radar screen by using insurance? Because I don't think a lot of people understand how you stay. It's not stay off the radar screen like it's illegal. How do you stay off the radar screen of the IRS in overpaying in taxes?
Okay, so this is a contract that's governed by private contract. I'll give you a contrast of just a little bit. A Roth IRA, for example, Senator Roth, his whole intent when he started there is he wanted to create a retirement plan modeled after this type of insurance. Well, guess what? When it went through the Senate, everybody wanted to amend this, amend that, whatever. What actually came out was not quite as good. So what this is exactly that. It has the ability, governed by private contract. The government doesn't ask about it, doesn't know about it. It's not reported. When you receive dividends, they're not 1099 to you. You don't report it. So it truly is off their radar screen for the fact they don't know about it. And to some degree, they're unable to ask about it. I wrote part of a book several years ago, and the book title is Get What Congress Gets. And so I wrote the chapter about this type of insurance. And the first thing I did, being kind of an analytical geek, is I went out, public knowledge, public records, went out there and found how much of this type of insurance and this type of contract every member of Congress, so the Congress, Senate, the president, the Supreme Court justices, they had as an average, and now really have to realize some people had in many millions and some had none. However, the average is right around $500,000 in cash value for all of our government officials. They're not going to close this loophole. They like it. They know about it. They want it.
I love it. So for those of you that are listening, you are going to fill out an application in the show notes. So Jason, before we end, I have one more question. What's the right kind of person for this?
Simply put, me. Now, what you need to look for, in my opinion, is number one, are they doing what they're telling you to do? Are they practicing what they're preaching? I think that's really telling whether they truly believe. And that's what I live, sleep, and breathe this all the time. I practice it in my life, with my kids' life, all kinds of stuff. I think that's number one. Number two, being the kind of person that will actually design the policy with the client in mind. And here's the thing, it's a little bit of a give and take, the more the client wins, the less commission for the agent. The more commission for the agent, the less it is for the client. You want to find someone that's willing and has the moxie to do it so it's best and optimized for you, the client. You need to ask them those hard questions and find out, are they doing it so where you'd get that amount of money access in the first year?
I love that.
So before I go into this last piece, again, hit that subscribe button, put the notification button on. I'm here 5 days a week. And every morning you want to wake up with a message from Loral and become financially literate. Make that a goal in the next 365 days. Now, let's talk about the goal between life insurance and death insurance. So death insurance is just term insurance. It's all that stuff that you get pitched every day in ads on TV. $5 for this and $20 for this. And as low as $12 a month, you can get, a $500,000 policy. And what if you outlive it? Then you just wasted all that money. There's a whole way to set up life insurance for generational wealth. So what I want you to do is I want you to click on the link. I want you to go to my quiz. I want you to take my financial personality test. Now, this is going to be a little different because we're going to send you an application for a free, complimentary on me. I'm going to pay my insurance guy to talk to you about real life insurance, bank level life insurance, the insurance that Jason just talked to you about. So click on the link, take the quiz. We're going to send an application, and then we're going to send you over to have a complimentary conversation about real life insurance that's set up for generational wealth. Term insurance, you can't do that. It doesn't work that way. So don't go through this whole life to end up at the end with the death insurance policy. Click on the link. I'll talk to you tomorrow.